Crude oil last week continued its journey towards the top of the channel as we have discussed several times earlier. Last week we discussed that beyond 88 levels should not sell oil and one should stay long. It has achieved 90.6 as the high here. So will it continue towards its next destination and the top of the channel and the resistance level here at 92.5? 92 levels, or we can see a pullback from here. Which position you should take trading crude oil next week, we will see with the help of charts followed with indicators, and towards the end I will give you the trading levels, observation summary, and the strategy for next week. Watch till the end. Do like, share, subscribe, and comment. Your every like, share, and comment is a great support, inspiration, motivation for me to deliver weekly and twice a day analysis on crude oil, which definitely adds meaning to your day-to-day decisions. Also, you can press the bell icon in order to get the live updates and join my free Telegram channel for live market updates. Link is mentioned in the channel and video description. Let's start. See, crude oil on the long run has achieved the bottom here, and this time at this point we have seen that after consolidation it has given a breakout, and we have been recommending buys on oil since $70 levels. Now the first milestone was at 84. It has breached that successfully, couple of retracement candles, and again this bull run has continued. Now if you look at the crude is continuing in this bullish channel. The top of this channel somewhere here at 92.5, 92 zone. Very strong resistance here, and as long as these levels are respected, we can see very strong resistance for oil here at the top of the channel, and from the top of the, you can see resistance levels here at 92.5, because beyond this we can look forward to 95, and then in fact $100 levels, which is a key critical milestone for crude oil in the near future, might get it. Another observation on the weekly chart, see higher lows were seen and a flat top. Flat top is a bullish indication for oil here, and hence once we see oil staying above 91, one should stay long. One can expect it should achieve 91.6, 92.4 zone. Even if it has to retrace, even if it has to reverse, these levels should get achieved. That is the first observation, and that is definitely a very strong resistance here at 92.5 levels. One has 92, 92.5 zone. This complete zone has a greater resistance, and hence you have to be cautious, watchful at around these levels. At the same time, one must note that it has created steps here. Higher lows are seen and a flat top. This suggests that possibly next week, if it continues above 92.5, we can look forward to in fact $95 levels. Another greener candle may appear, which can take it towards those levels. So you have to be because see, it has created a step here, and once it has a stepping stone, we can see the next candle could be taking the support from the base of this and continuing its upward. Next observation here is, see if it gets a resistance and shows a pullback, still I see here at 86, 87.6 zone as a great support for oil here on the downside. Only below 86 levels is where the bearishness may prevail, and you can look forward to 84 levels here. And even if it tries to retrace in the beginning of the week, do not treat this as bearish. As long as 87.6, 86 levels are respected, we can possibly see a recovery towards the end of the week. That is also very much possible. Now this is purely on the weekly charts. Let's have a look at the daily. Now see what has happened on the daily charts. You can see higher lows, higher highs. See, last candle is very important. This could be also a signal towards the reversal of the trend. At the same time, a breakout above 90.6, 91 levels should be taken up very seriously, as it can yield similar size of candle. When I say similar size of candle, you can look forward to $2.50 here. It can yield $2.50, which is going to take it towards 92.5, 93 levels as well. So yes, we have to note this. The last candle is very important. It can show that, see, the candle has started on a flat note, ended on a red, and if it opens below 90.4 levels, then we can see little more retracement in the coming couple of days. However, on the downside, this first support here at 88.4 and the next support here at 87.6 levels. Now 87.6, one should note, is a great support for crude oil, and this is the first strongest support as long as 86 levels are respected. Also, one must note that it is still trading in this bullish channel where higher lows, higher highs are seen here. So yes, these levels are definitely going to play a very important role in the coming sessions. Also, another observation, see the rise here and here, see it has graduated. This was sharp bullish move, this is a gradual bullish move, and a breakout is equally going to bring more bullish momentum. It can show the same slope here. So this is something you should watch out. Now let's have a look at the monthly candle. See, at the beginning of the month itself, we have said that it is, see, the previous candle had a tail and a smaller body, and any breakout on the upside will bring more bullish momentum. That has happened here. It has continued on the upside. Now, see, it has created a step. So, possibly you can even look at similar size of candle. Now, this size of candle is almost from 70 to 82 levels, $12 of move. And if you count the same movement here, you can say 84 to, in fact, it can, continue its upward move beyond 95 as well. So do not treat oil as bearish as of now. Clearly, it is staying bullish. It is showing good signs. First resistance at 92.5, then around 94, 95 levels, the next milestone. Beyond that, the next strongest resistance for oil is seen at 98 to $100 levels. Remember, a breach of this channel should be taken up seriously, because see, on the monthly chart, this is a clear flag formation here, and a breakout out of the flag possibly next month. Even if it continues, it is going to be treated seriously. We can look forward to double top levels as well in oil in the near term. So this is something we should watch out for. Now we have seen the charts. Let's have a look at the indicators. Now, on the indicators, moving averages have started to look upwards. Price is staying up the moving average. The 20 months average is now at $80 levels. Very good support will be seen even if it continues its downward journey any point of time soon. These levels are going to play important role. And then 80 to 70 zone, completely 20, 50, 100 period moving average sitting over these levels and are divergent and are bullish. Now see, stochastic has seen extremely high levels here. Now this is really extremely high levels here. We can see whenever oil has reached on the monthly charts, the highs which is seen are around middle of this. So first thing is, it can approach further highs, but then a pullback is must towards the end of the month, or maybe from next week itself, next week end. First, it may try to achieve the highs, but a pullback is what you can look forward to. It should not try to close at around the top. The possibility for it to show a little retracement, close at around these levels, continue here for a couple of months, and then drop. So this is what you can look forward to. Yes, it is right now at a good high levels. We can see on the monthly charts, even whenever it tried to rise, it has shown a little, it has fallen shy of these levels here. Now, if you look at the stochastic MACD, see MACD, we have clearly shown you. I have multiple times told you, look at the waves here. First wave, second wave, it is trying to converge, it is trying to cross over. We can see the initiation of the greener part of the third wave from here. This is a bullish sign. This is a sign that if it crosses over from here, we can see the bullish momentum continuing in oil. You can clearly note, you can clearly observe these waves here and the third waves continuing. Possibly it can lead to higher highs, and this is an indication that oil might try to double top levels in the near future, which is, remember, this could put an extremely excessive pressure on inflation, which multiple nations including US, Europe are fighting. And this inflation levels will definitely have an impact on the economy and will add up to the pressure already existent. So yes, we have to be watchful here. RSI is rising. This is also bullish indication. Coming to the weekly charts. Now on the weekly charts, one important observation here is the crossover between the 20, 50, 100 period moving average. This is a bullish sign. Remember, this crossover is now observed after weeks here. See, in 2022, this was the bearish cross which is seen, and now it is looking upwards after almost 1 year. Also, if you look at this was the next last bullish crossover between 20, 50, 100 period moving average. Similarity seen as all are gathered together at the same place, and from there the divergence started to take place. Here also we can expect the same to happen. So yes, a breakout above the channel can lead to the top of the channel here, which might lead the prices towards $120. Now look at monthly stochastic. This is again has come to overbought zone. So from the overbought levels, what has happened previously, you can see it can stabilize here at some point of time. So yes, and this stayed overbought for months. So there is a probability that it can continue for a few months from here. Now look at few weeks from here, because this is weekly chart. Now look at MACD here on the weekly charts. Divergent, bullish, looking upwards, and At this point, I have told you, see, it is consolidating here and a divergence should bring more bullish momentum. That is what has happened. Right now, it is continued to look upwards. Candle size is consistently increasing. It can continue its upward journey. RSI is also looking upwards, staying bullish here on the weekly charts. Now, on the daily charts, my only worry point is the divergence of the prices from the moving average. And hence, as far it diverges, the chances of the pullback will be very, very strong here. Yes, there could be a pullback 86 levels where is the 20 period moving average, and then the 50 period moving average sitting at around 82. So the farther it diverges, the stronger the chances will be of a pullback. So let me show you some historical patterns. See the divergence here, then the convergence, the divergence here, then the convergence, the divergence, then the convergence. So historically also you can check the farther the divergence, the stronger the convergence is. And hence, again I am repeating, right now the prices are too much divergent from the moving average. This possibly calls for a little convergence, which suggests that what may happen, see previous last candle was a red candle. What could happen, it may not try to break past on the upside. It can try to now consolidate here for a little while. 87.6, 86 uh, levels here, 87.6 levels, very, very good support, 88.6 and then 86. So this is going to be the greatest support here. Possibly we may see little retracement. The moving average might come up somewhere here at around 87.6. It consolidates here for a while and then continue its upward journey. That is one more probability. On the daily chart, the stochastic is overbought. Another concern, the MACD is divergent, bullish, looking upwards. And if you look at the MACD, see, it does not mean that it has achieved the highs. It can further scale up to the top of this, and which is a little distant level. So this is something which also suggests that even before the pullback, it may try to achieve the highs at around 91.5, 92.5 zone. Very strong resistance exists at 92.5. RSI is also extremely overbought, and see last time when it went overbought, we have seen a little retracement here. So the chances of a retracement increases, the chances of a pullback increases, and yes, only call which I look forward to is achieving 92.5 levels at least for once, even if it has to retrace, and then from there we can see slight bearishness. So this is about charts and indicators. Now let me give you my summary and observation of the charts and followed with trading levels. So before I provide you the summary and observation, if you want to learn this art of trading, you should join my mentorship batch. 26 batch is going to start on first week of October. Only limited seats are available and purely on first come first serve basis. Register yourself now itself. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. So yes, this observation here is, it is oil prices are still bullish. We can look forward to a trend breakout as well. Already it is staying bullish. We have seen 90.6, 90.8 zone as a greater resistance. Beyond this, the strongest resistance zone for oil is at 91.5, 92.5 levels. As long as 92.5 is respected, we can see a pullback, because see the prices are divergent, too much excessive bullishness is seen, and hence a little retracement cannot be denied. At the same time, we can probably expect it to consolidate at around 86, 87.6 zone, even if it tries to drop, and then from there the up move may continue. But also at the upside, 92.5 levels are achievable. So take trades accordingly. Now let me give you the level. First, let's talk about the levels to buy. You can buy here at 90.8, expect 91.4, and then 92, 92.5. Now this is going to be a critical resistance zone here. So yes, these are achievable levels, but these are going to remain critical. Beyond 90.8, certainly the bullish momentum might prevail. Beyond 92.5 levels, we can look forward to 93.2, 94.5 and 95. These are the next milestones. This is the next strongest resistance zone for oil here. If it stays beyond 95, sky is the limit. We are going to soon look at 98 and $100 levels as well. 100 is an important psychological resistance level. On the downside, where to sell? I will recommend you to sell here at 90.2, but then 89.8, 89.2, 88.6, 87.6. Now this is the major milestone here. First resistance, then this is the first resistance, this is the second resistance here, very strong resistance here, and below that we can look forward to 86. chances for it to break below 86 are less, but these are markets. You have to respect the trend, you have to respect the levels and trade accordingly. Trade profitably with the stop loss, with the trailing stop loss. You can watch my twice a day analysis for more detailed understanding of the daily trade levels. Do like, share, subscribe, and comment. Press the bell icon. Join my mentorship batch and signals channel. Reach out to me for any of your trading or training queries. My Telegram and email IDs are mentioned in the channel and video description. Thank you very much. Have a great profitable trading week ahead. Thank you.